What's going on, everybody? Q here from Hyperstocks. Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over Tesla, QQQ, IWM, and NVDA. We're going to give you all the resistance and support points that you need for these stocks. That way you know exactly where to enter, where to take profits, and where to cut losses if you have to. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles, where we can see that this week SPY has mostly consolidated in the same range, and it's been a bit more of a frustrating week if you've had any experience with the swings. The reason why is because the market is experiencing something called rebalancing. A lot of investment portfolio managers will start rebalancing their portfolios at the end of the quarter, so there's not a lot of consistency for traders. Therefore, this week has been mostly a day trading week instead of a swing trading week. But either way, we're going to give you the levels for both. So let's go ahead and move on to the shorter term candles on SPY. If you're looking at the hourly or the 30-minute candles, these are the resistance points you want to focus on. Now, of course, you can see that there are a lot of resistance and support points to work with, and that's primarily because it's been such a choppy week. But if you did see the market on Tuesday, then you did know that there was a massive reversal of the 431.19 support, which makes that the most critical support going into the rest of the week. If markets lose that point, then they can sell off deeply towards 427 to 428, and below that point we can move to a price target of around 425 to 426. Now, if you are bullish on the market, the full bullish breakout that will leave you safe to swing will be above 443.90. Anywhere below that point, swings are going to be very high risk on calls, and give yourself a lot of time if you plan on taking them. You will need a breakout above 437.43, which was this week's high. You can see that this is the point where we got rejected today. You will need a breakout above that point for the market to continue moving towards 439.50. Above that point, there's not much resistance. There's a little bit of resistance around 442, but if we do break that 439.50, we expect the market to move towards the 52-week highs. At that point, SPY would be above the 10-day moving average, and it will likely continue its push higher into next week. But that is assuming that we do have that breakout. Now, moving on to the next stock on our watch list, which is going to be Tesla. We can see that Tesla here is trading just like SPY, below its 10-day moving average and above its 20-day. The stock has came down to the 20, tested it, and buyers came in. However, today when it attempted its move back above the 10, you can see it got rejected. So just like SPY, your main focus, if you are a bull, is for the stock to move back above this blue line for it to head towards its recent highs. Let's take a look at some shorter term levels on Tesla. First of all, if you are bullish on the stock, you need the stock to move above 262.50 for it to continue an intraday continuation. This is not a place in which the stock is safe to swing. You will need the stock to move above 279.54 for you to safely swing calls. Otherwise, if you are swinging calls, make sure you're giving yourself plenty of time and a lot of room to breathe, because the stock may consolidate here for a few more days or a few more weeks even before it finally commits to this breakout. If you're bearish on the stock, you're going to need a move below 246.60 for a continuation to the downside towards 238.50, and below 238.50 the downside price target is going to be around 230. Now, moving on to the next stock on our watch list is going to be QQQ, which is the tech ETF. Now, just like SPY and Tesla, QQQ is also trading below the 10-day and above the 20. The stock came down to test and went up to test, and it's still consolidating in this tight range. Like we said already, the markets have been a little frustrating this week. You can see on our record that we have had a lot of back and forths. Overall, we're up. However, we have had a lot of back and forths, especially on the swing trades this week. Usually swing trades are our big hitters, but this week, because it has been so choppy, it has been a little bit of a tougher week for those swing trades. But overall, we're still managing to take some profits home from the markets. Now, talking about QQQ on its shorter term charts, we can see the stock came down to around 357.50 recently, which makes that the most critical support for the overall picture. If it moves back below this level, you're going to see that it moves back into this consolidation range that it created here. Now, it spent about 10 days trying to get out of this range, which means that if the stock breaks back below its breakout, a lot of buyers are going to be upset and they're likely going to exit the stock. Now, if you're looking at QQQ's levels, here are some levels to focus on. First of all, we talked about the 357.50, which is already a support on our chart. make sure you place it on yours. But you don't have to wait till 357.50 to get into a put position. You can get in below 361.70, which was today's lows. If it breaks below that level, then it can move towards this level, but we wouldn't get into a full position until it moves this below this level, and then our price target to the downside will be at least 354. If you're bullish on Triple Q, the day trade breakout is going to be at 367, but it's not safe to trade or swing calls until the stock breaks above 372.85 and closes above that level. At that point, your next price target to take profits would be around 376. The next stock on our watch list, or ETF I should say, is going to be IWM. Let's talk about some levels for IWM, and let's talk about it on the daily candles. By the way, if you haven't seen our videos before, the reason why we always start with the daily candles is because it gives us an idea of what the overall picture is doing, and then we focus onto the micro candles where we can see what's happening on the shorter term charts. Now IWM, unlike everything we just talked about, managed to squeeze a close above the 10-day moving average today. So going into tomorrow, which is Thursday and Friday, you want to focus on that 10-day moving average. If IWM can close above that level, or if it can gap up above that level, then it has a chance of continuing higher. Let's talk about some levels here. The next resistance on IWM's chart is going to be 185.90, but that is not the swing resistance. That is simply a day trade resistance for a potential price target of 188 to 189. If you're looking for a swing trade on IWM, you want it to close above 189.24 for a continuation towards 191 to 192. Now, if you're bearish on the stock, then you need a break below 182.10 for it to move towards a price target of 180 and a second price target of 179. Now, the final stock on our watch list is going to be NVDA. Before we get into NVIDIA, we have to talk about the most recent headline that's driving the markets down, and this would be the new curbs on AI chip exports to China. Now, this is just a consideration from the US so far. They haven't implemented it, but the reason why they want to restrict exports is because they're scared of what China could potentially do with the technology, and rightfully so. So we're not going to get into it too much. We're not going to get political, but I do suggest that you look into this. NVIDIA and AMD were the hardest to get hit, and that's because they're the leading semiconductors in the market right now. You can see that when the news came out, NVIDIA suffered a very, very sharp drop, and this was in post-market. So, of course, the White House waited till post-market for them to release the statement, and the stock took a very, very large tumble, coming down to a low of 396.50 before reversing in pre-market. So, let's talk about some NVIDIA on shorter-term candles. The biggest support for NVIDIA obviously is going to be that 396.50, which is the big reversal that it saw. We gave it just an extra dollar because that's where the gap fill is. So if it breaks below 395.50, the stock is going to suffer a very deep sell-off, and the next price target is going to be around 385. Let's go ahead and plug that in for you guys. And so the stock is currently in a very, it's actually in an unattractive territory, because you can see that just like in our example earlier, how when a stock spends a lot of time in one consolidation range, you want to usually see it stay in that consolidation range for it to break out. This is not the case for NVIDIA. You can see that the stock spent more than 2 weeks above 420, and then recently the stock broke below that level. So all these buyers, they're losing confidence, and the stock even went to retest 420 and got rejected back down. So as long as it's below 420, the stock is going to be kind of in trouble. It's going to be choppy. You need it back above 420 for the stock to move towards 425 to 427 as your first price target. But it's not going to be safe to swing calls until NVIDIA closes above 440. If the stock closes above 440, this is going to be considered a blue sky breakout, because this is the highest point the stock has ever made, and therefore the stock can rally on forever. You have to watch the volume patterns at that point for you to consider a price target. We will talk about price targets in our next video, so make sure you're subscribed and don't forget to like, please. Thank you for the support. So I hope you guys found this video helpful. If you want to get access to our premium stuff, make sure you check out the links in the description. Thank you so much.